Hello, welcome to Wednesday, March 22, pre-market observation. Today is a big day. Powell is gonna make an announcement probably in about 30 minutes. Is it 8 or 8:30? I'm not sure. I'm a bit under the weather, so I'm gonna keep this real short. Uh, Went on spring break vacation for a couple of days in New York City. Came back late, Saturday afternoon, and I felt under the weather since Sunday. Woke up with a pretty bad sore throat, and it still lingers even today, 3 days later. And I just took my first COVID test this morning, and it is negative. So whatever I got, catching, flying, is not COVID. At least not yet. I will do another test probably in a couple days just to make sure. But yeah, I'm not well. Just have a little congestion and a bad sore throat for now. Anyhow, let's jump right into it real quick. AAP had been pretty ugly. What an ugly downtrend. I still hold my position. I'm thinking about adding more, but I want to see it level out. Certainly way oversold for whatever reason. Who knows why? I look at the company and nothing looked terribly bad for me. So it is at that level where I think support should come in, but I've been saying that for quite some time. Let's go back even 5 years, okay? And let's see. Yeah, this is about as ugly as it gets, right? Way down here. Don't, the last time it was worse was, of course, COVID. For me, if I see a strengthening and flatlining, I will likely add to my position. But for now, it is a leave alone. Let's go right to the key here, TLT. Yes, TLT. I have been bullish on TLT since last October. What did I do yesterday? I sold a bunch of puts all the way down to 102 next Friday. I have puts between this Friday and next Friday. I have 7 puts between 102 and 104.5. I am that bullish on TLT going forward. I'm not going to chase it above where it is right now, 105. I would buy below 105. But depending on what the Fed plan to do today, what the Fed announced today, I am in the camp that the Fed is not going to raise rate due to the crisis in the banking system right now. But I think they are caught in a vice where they don't want to panic the market further. So in one way, I can see why they would raise a little bit and then say we are pausing. I think the market will be okay if the Fed say we are raising 25, but we are pausing after today to see how things will play out, to see how the financial markets is going to be able to handle and stabilize. To me, that would be okay. I don't think the market will sell off if the Fed raise by 25 bips and then still use the word pause going forward. What I don't want to see the Fed does is, which I don't believe. I can't fathom Powell go on the podium today and talk hawkish. I cannot fathom that. If by any chance that's his tone, then we will see a massive sell-off. But that's the only scenario that I can see a sell-off in the market is if Powell go on the podium and talk complete nonsense as if nothing is wrong with the financial banking system. Okay, so I'm fairly bullish in bond going forward because the crisis in banking, no doubt, will impact the economy even more than what the Fed has been doing. Why? A big part of our consumption economy is spending. If there's anything for those that work in banking that understand is whenever there is a crisis in the banking system, bank roll back lending, whether it's mortgage, whether it's extending credit line, anything, everything. They are going to tighten their belt in order to shore up their balance sheets to make sure that they can handle any kind of crisis. So by just doing so, they will make lending much more difficult for auto loan, home, you name it. It's going to be a pullback in lending, and that alone will curb the consumer. If you, if the consumers, which they have been, ignoring what the Fed's doing, doesn't matter if auto loan is higher now than in the past decade, people are still going out there and buy car and get 8, 9, 10 years auto loan, which is insane. That will curb, okay? There is going to be a stop on a lot of nonsense lending that has been going on. Even with high rate, people are still using, the crazy high rate to buy used car or new car. Well, that kind of lending is going to be tightened significantly. So I do believe the financial system will do the work for the Fed because of the problem we have right now. So TLT, my plan is to keep adding below 105. I don't have any problem at all if my 7 puts get assigned between today and next week. I'd gladly take the 700 share at an average cost of about 103 or less. Yeah, I take it. As far as the rest of the market, there's definitely a flight into technology, right? That's why you see Google looking good. Last time Google, last time Google was here at the 200-day moving average, didn't hold. Okay, so right now it's looking good. I'm not selling yet, but I would look to trim maybe 107, 108. I will have an order up there. And where do I really want to sell? Uh, I think 114. If Google can get back into this channel, I think we can go as high as 132 up here. Okay, so at least 121. That would be nice. If Google can get into this channel, then perhaps 119 to 123 would be the spot to trim and then look for the channel high. But for now, let's get at least to 108 first, where it was soundly rejected on these 3 days right here, right? So one level at a time. Meta, yeah, big move for Meta. Clear this high, right? So now, where can it go? Can Meta get up to the high of almost a year ago? It's possible. All they need to do is announce another round of layoff, make it the third time, and you might get there. As crazy as that sound, yes, more layoff will do the trick. Microsoft, yes, resistance up here. Yeah, as long as there are problems in the banking system and the potential that the Fed is pausing, you will see money start to go back into technology, right? You can't fight that trend. That has always been the case. There will be money reallocating into technology if the Fed pause, because if rate keep rising, then tech will, the Nasdaq and tech will get sell off. That's just the way it is. Okay, there is an inverse relationship between rates and the Nasdaq, technology, chips, everything. But if we have a pause, you will see strengthening and reallocation of capital into a lot of big tech. That's coming. So I'm less bearish on technology as a whole because of the Fed potential of pausing. Uh, So I like my, well, I'm not into Microsoft right now. Would I buy Microsoft on a pullback to the 20 MA? Yeah. Would I sell puts down here in the 250 range? Yeah, I would. Um, I sold a put on Amazon, but I closed it. I do the same on any Amazon pullback into the mid 90s. I would sell put at 93, 94. I think Amazon can do a lot of catch up on more layoff. Okay, they have a huge Amazon balloon in staff since the pandemic, and there will be some more trimming needed, and the stock will bounce on those kind of news. PayPal still going sideways. Nothing to be excited here. Um, PayPal just need a lot of momentum to break through all these sideways resistance here and close the gap. If PayPal can somehow get to the 200 MA and close the gap, get to the 200 MA is not good enough. See, look, last time it gapped over that and it couldn't hold, and then it fell below everything. So for me to get excited, it need to at least get over the 200-day moving average and hold, and then close the gap, and then we can have maybe a gap, close the gap, and then go. Okay, so there's still a lot of room to work on PayPal. Bank of America, stabilizing. I'm not adding to the position. My cost average is around 30, which is fine. I'm fine with the position here. I need to see stabilization in the banking system to add more to Bank of America, because a clear winner on this bank crisis would be the bigger bank like JP Morgan, even Wells Fargo and Bank of America, because they're gonna get a lot. They have been getting a lot of money, deposit money are flowing out of the smaller regional bank into the Bank of America, the Wells Fargo, the Chase. So I think that I just needed to stabilize. A lot of fear right now in the banking system. So once it stabilize, I think adding to it, even double down in this range, 28, 29, there could be a nice run back to the low 30s. Can be a 10% gainer there. Goldman Sachs, I bought on this crazy dip and even sell puts. It's crazy, but it get down there. Same thing here, Bank of America. I would add to my Goldman Sachs. Uh, I was looking to trim if they can close it, but that's okay. Right here, I was thinking about trimming, and then I did not. Um, no rush, no rush to trim, no rush to add, but on any pullback to the 312 level on the gap down here, the gap fill down here, I would add to Goldman Sachs, but I would sell put and put spread below 300. I think the risk reward is do that on Goldman Sachs for sure. JPM. Yeah, if you bought JPM on a 200-day moving average, congratulations. I like JPM. I didn't like JPM up here. For those that follow me, I like JPM back here, down here. I got out and then I didn't like it up here. But now it's back here, I like it. So on any pullback, or if you want to sell put using the 200-day moving average as your target, yeah, it's okay. The one area that I like, LH, okay, yeah. If you bought down here, congratulations. It's hard to play options with LH because it's just monthly options, so I don't like to do that. Okay, LH, I like buy on dips for sure. I like down here. Same thing with DGX. Yeah, last week down here. Okay, same. If it is a pullback, yeah. But if LH get to the 20 MA, you might trim. Yes. Look, the 20 MA once it broke was a decent support, and then when it break down, then it become resistant, right? So If you have DGX, you bought DGX down here in the 131, 132 range, yeah, take your gain at 137, 136, right? It's a $5 gain. Take it. UNH, I like. For those that bought the dip, congratulations, but sell the rip, okay? Sell the rip. I would definitely trim here at the 50 MA. At least have your stop at the 20 MA, but this is not the kind of market that you want to overstay your welcome, right? Same thing with ELV, which I like a lot. I like ELV at 475, so for those that bought in the 450 range, yeah, I sold puts using, I sold 440, 420 put spread. Yeah, that's crazy low, but they will expire worthless Friday. Would I outright buy the share? Anything below 460, I would nibble, right? Because I think the risk reward is to be long. But for me right now, if you have it, maybe you should set your stop using low of day yesterday. For sure, I would say trim at the 50 MA above, right? Don't be greedy. Always trim into resistance. Target. For me, the easy play is still sell put down here. Okay, sell put at the 155, at least 155. Yeah, it's okay. I would add the share if I see below 160. I would add some share. Right now, I have nothing, no position in target. Walmart, same thing. Okay, I would rather sell put at 135, but if I see anything below 138, I nibble into target. Costco has some big move. Yeah, Costco have a nice move from the bottom here. So for me, I have been selling put spread on Costco every time I see Costco weaken into the below 480 for sure. If I see each time Costco dip below 480, I start to sell 460 put, 465 put spread, like 465, 450 down here. But the big purchase would be the gap fill down here, should that happen. But for now, for me right now, Costco is a sell, right? If you have Costco, I would say trim here to the 200-day moving average. Yeah, sure. You can trim some here, and then if it run, get out up there. Hard for me to see Costco back into the all-time high, but it is a no touch for me right now. I'd rather buy Target and Walmart for now. How about the drug? Eli Lilly. I had my position there. I did have an order to trim, but yeah, 335 is a trim. Okay, the 50-day moving average is a trim. So if you see a pop to 335, that's where my order is. For sure, the 100-day moving average is the area that I would probably exit everything I have in Eli Lilly. Pfizer, stabilizing, looking good. I would trim for sure up there. Okay, my average cost on Pfizer is around 43, but I would trim right there. I bought a lot on this move down here. I bought more, and then of course it did this. So for now, target to trim 43, and then 46. That would be nice. No complaint. I'm not worried about Pfizer. JSK, ugly move. I still have my position. I will look to trim at 35, but for now, I still have everything. I would trim a little bit at 35.5, the 200-day moving average. Gotta stay disciplined. Okay, as much as I like to see this higher, if I get to the 200-day moving average, I would trim a little bit just to stay disciplined. What other drug stock that I looked at? Amgen. stabilize, right? Not a surprise to see stock came down to key support. Look, Amgen, this area right here, 227-ish, is key support for a long time, right? So if you held your nose and bought Amgen, yeah, on a pullback, I would add, okay? How about Biogen? Nice, okay, nice. I did not have anything. I was looking to sell put spread below 250, but this bounce was too quick. It didn't happen. It's still tenuous, so be careful. You know, if a market sell off on big pharma, yeah, you can see it. For me, I would definitely buy a few share outright if I see it touch the 200-day moving average, just a little bit. There's a huge gap, okay, so not too crazy about that. Gilead, same thing, okay. It big gap, big move, and ever since it's been a downtrend. So for me, where would I buy it? I would rather buy it down here. I wait for the 200-day moving average on a pullback. Otherwise, stay out. XBI, which I have a put, I sold a couple of puts the last couple of weeks. Would I add the share at 74, 75? Yeah, to me, I wouldn't mind buying a share at 75 and below. If it breaks 76, I have a put at 76, which I will let it assign and buy some share. Not a problem owning a little bit of XBI right here, right now, okay? Transport, which I have not talked about in a while, but look at this big move. Wow. Okay, the transport, you can see strength. If the Fed pause and, you know, in a bad economy, going into a recession, transport always got beat up, right? That's given. But in a recovery, you see a return on transport. So transport are running ahead of the economy already, like UPS. The transport always bottom before the economy bottom, and it always rebound before the economy rebound. It always front run. Okay, I have said this many times. The stock market front run the economy. So you can read the sign of what big money are doing. They always position themselves ahead of the actual data. So for now, transport is telling me it is signaling a rebound in the economy because the Fed is going to pause and cut rate in the future. So if that's the case, the one transport I like is CSX. Yes, CSX, okay? I like CSX here. On any red in the 29 range, I would add a whole lot down here at 26.6. But to me, if you want exposure in transport, CSX is likely the best bang for the buck. That's where I will look to add. JBHT, JB Hunt, same thing here. Okay, if you want exposure to transport, I'd rather own or buy JBHT, CSX instead of UPS and FedEx. So buy on red on JBHT and CSX. Before I go, let's take a look at energy USO. Once again, for those that follow me in my previous channel before YouTube take me down, well, YouTube shut down my channel, took me down. I said it many times, in a recession, oil would go below 60. I said that all of last year, okay? When USO was trading sideways in this range between low 60s and upper 70s, I said, if we have a recession, it will go below 60 in a nanosecond, real quick. And that's what we got, right? We got that recession fear, banking crisis. Now, once again, oil will also rebound if the economy stabilize. But for now, I can see oil trading in the low 60s for the next couple weeks. Transport will front run the economy before energy. So I don't expect energy to rebound like the transport. Not yet. I had a couple of puts on Oxy. I closed it out for a small profit. Same thing. I would buy Oxy down here in the mid 50s, right? To me, it's safer to sell puts and put spread on Oxy using, say, 55, right? This level, instead of chasing it here. Once it fell out of the channel, it was in trouble. And yes, Warren Buffett tend to be the buyer in the 58 range. So if you want to buy the dip at 58 and below to be with Warren Buffett, you can. But to me, it's safer to sell put at 55. Can it get, hey, can it get down to the low 50s? Test the 52-week low? Absolutely. Okay, absolutely. Energy is not done falling yet. That's my message. It can happen. LNG, okay, weak energy. But to me, it was worth buying the dip down here for those that did, but it's worth taking your profit up here. It fell out of the channel. Once it fell out of the channel, watch out. There could be a downtrend coming. Okay, so it could be, can LLG pull back all the way down to 120? Very easily. Very easily. It can happen, right? So be careful with LNG. Be careful with energy. CTRA, I trade that a couple times, made money. I'm completely out right now. So for now, right now, I have very little exposure to energy. Very little. I'm out of Oxy, out of CTRA, out of LNG, and I have some put on USO, which I don't mind. Let it assign, but for now, no bueno on energy. Banks, I wait for it to stabilize to add to it. Last before I go is Pepsi. I got out of Pepsi on this move. I said enough is enough. I'm out. I still have Coke. If you want to buy the dip on Pepsi, buy down here. 174. Buy at the 20 and the 50. I sell at the 100. If money is flowing into tech, flowing into industrial, it's gonna come out of bank. It did, and staples. Okay, I think staple. Once the Fed start to pause, if he paused today, you're gonna see less enthusiasm for staples. Staples get the allocation all of last year and so far this year because it is staples. Earnings are more predictable into a recession, but once the Fed pause and money start to reallocate into technology and industrial and transport, you're gonna see a struggle for staples to hold. All right, so that's just the way it is. That's how the sector works. So if you look at Coke, Coke is more attractive than Pepsi. That's why I still hold on to it. But would I sell Coke at 61 and above? Yeah, I bought it below 60 in the low 59. Okay, so yeah, I would take my 5% gain and move on. Mondelez, which I did not buy any into. Mondelez is the strongest of all of them, and would I touch it here? Heck no, no way. If you have Mondelez, it's time to go. Okay, it is time to go. McDonald's, same thing here. It's at resistant. Look, resist, 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 resist. No. Uh, the risk reward on McDonald's is of course buy below 260, right? If you can get anywhere near 260 and below, yeah, that's the time to buy. Now is not the time to buy. Now it's time to exit. Last one is of course CMG. Crazy move. Crazy move. Okay, it's time to go. If you have Chipotle, it is time to go. Can it fill the gap? It's possible, but that would be the blow off top that you want to say time to go, right? I would be too greedy and hold for another $100. You can, but if you have Chipotle, be careful. Okay, it's a volatile stock. If you have it, you bought it down here on the support, congratulations, you made good money. You made 10%. What more do you want in less than 2 weeks, right? Anyhow, that's it for today. Time for me to get ready for the Fed. Bye-bye.